Nedbank Corporate and Investment Bank Mining and Resources Division is a specialist debt team who has extensive experience funding projects across the African continent over the past decade. I think what's important is that we are through the cycle bankers. We've seen many global crises before, and this does not impact our ability to extend debt. So during the COVID-19 environment, the same would apply. Obviously, we're going to apply fundamental credit principles and risk management when assessing opportunities and best market practice. I think it's important to always stick to those fundamental principles, and we would be consistent in using those in how we approach any debt request. Obviously, there's going to be impact in their capital costs, their health and safety measurements that they need to put in place, which will ultimately impact the total capex requirement of the project. So the capital cost of a project will be impacted by COVID-19. There will be additional health and safety regulations and procedures that need to be factored into the BFS, as well as capital procurement costs may increase. Then you would move into a company who's already in development. They may have completed their BFS and have already raised the capital prior to COVID. Now they're in the actual development cycle, and there will be a COVID impact, no doubt. This may be delays in getting equipment to site. It may be delays in getting technical expertise to site, and of course additional health and safety measures that they'll need to put in place during the development stage. What will be important at this point is obviously if they have got fixed cost contracts, because there will be an escalation in costs. Always there's contingencies taken into account, but this may not be sufficient to take into account COVID-19, and they may have to access additional capital in the form of cost overrun facilities. Again, as Nedbank, we would look at scenarios like this with our risk management hats on and apply good market practice. If the company is a good project, good asset, good management team, and they weren't over-leveraged to start off with, this is not going to be a problem. The next category of client would be a company that's already in production, and for example, they might be looking to do a brownfield expansion. Of course, they then will have the opportunity or the possibility of delaying that brownfield expansion. But if not, we would look at the existing cash flows, what they're generating from existing operations, and leverage off that. This is always going to be done with a COVID-19 hat on and taking into account these parameters when we do our assessment. But the overall message is that as Nedbank Corporate Investment Bank, we would stick to our good practice, risk management, and take all these factors into account. So any company that has the right level of leverage, the right asset, the right management is going to be able to raise debt in the COVID-19 environment.